All right, great. Thanks, guys, and welcome. This discussion, we're going to focus on blockchain and crypto technology. I work in crypto, and I am still learning every single day on this. The factors on regulatory requirements, the changes on abilities we heard in the previous one as far as even a stable coin, how stable it is I think is one question, but how you're able to transfer it from one to another is still a challenge. We'll explore this on a B2B side there as far as how does it work, what's the level of adoption, and how do we go into it. And thankfully, instead of me that has more questions than answers, we've got an esteemed panel over here. So we've got Rocelo from SmartPay, going to be talking about this from the international side. We've got Jose, who's an expert on the compliance side, and Aaron representing Ripple. There we've got some actual use cases there. So instead of spending time on the main introductions and why I like to wear cool socks, I'd like to hand it over to the rest of the panelists to do a brief introduction of you guys and your companies there, starting this way.
Pleased to be here. As I says, I'm from Brazil, but we develop solutions for a lot of countries, and especially because in Brazil we have the PIX payment system, which is very well known and was really, really good to connect straight to the blockchain. So my company in Brazil, we are focused in convert reais into USDT and USDT into reais, because the majority of the world, they use USDT, so it makes easy. So we come up with an API that we're able to do that conversion. I am working with blockchain since 2013, and mined, smart contracts, payment systems, so from A to Z, guys can ask me any question, but the latest one was how to connect bank chain and blockchain. So that's where I'm spending a lot of time right now, because very soon users can travel the world and use reais anywhere, and the merchant don't have to understand how it works, don't have to understand our currency, don't have to understand the blockchain. They're just going to receive very simple and very easy.
Hi, good morning, Jose Lapadula. I specialize on the compliance aspects of financial services, and for the past 3.5 years, I've been heavily involved in the crypto side. I set up the compliance infrastructure for Crypto.com in the Americas, including the responsibility as a BSA officer in the US. But more particularly, I was very heavily engaged in setting up operations in different countries, particularly in the Americas. And so from that perspective, again, happy to be here and answer any questions that you may have on that front.
Great. Hi, everybody. Thanks for having me, Eric. Good call on the socks there. Very careful consideration whenever you're up on stage. Anyway, I'm Aaron Sears. I'm the managing director of the Americas for Ripple. I've been with the company for about 3.5 years, and I'm based in San Francisco. And my background is actually consumer internet, so everything about payments and crypto I've learned in my 3.5-year tenure at Ripple. So Ripple is focused on helping enterprises move value around the world, leveraging blockchain and crypto technology. Our initial use case has been focused on payments, which I can talk about today, and we've also sort of ventured out into liquidity services and tokenization services as well. Which might not be the focus for today, but sort of expanded use cases that we've got going. So happy to be here.
Thank you, guys. And I think one of the biggest questions is, what are some of the benefits that we see with blockchain? And I think there's some universal pain points of how do we continue to grow. We talked about the innovation in the previous panel. We talked about P&L optimization as far as gross margin. What does blockchain bring to the table that's going to help the B2B payment space there? And I'd love to hear some more of your use cases that you mentioned, Aaron. Jose, I'd love to hear your thoughts about yes, but there as far as growth, but how to manage it. And then Rocelo, from you, it sounds like you're leveraging it right now. How are you doing that? If we could start in that order. Aaron, I'd love to hear your thoughts.
Sure. So yeah, as far as use cases are concerned, I guess to speak to the pain points, first and foremost, if payment solutions, or sort of legacy payment solutions, are based on archaic messaging technology and other sort of archaic technology. They also often involve the need to pre-fund. And so very significant effort goes into actually managing those Nostro and Vostro accounts, Some reports say that they're up to $10 trillion around the world that are parked in those Nostro and Vostro accounts. And just thinking about the overhead of possibly people in this room actually dealing with topping up those balances, working around wire cutoff times, and so forth, it's a real problem. So, blockchain and crypto technology allows for much more transparent, just visibility into the status of payments, 24/7, 365 availability, and then also the removal, instant settlement, essentially removing the need to actually deal with those pre-funded accounts.
And that instant settlement also removes the volatility of any currency fluctuations as well, right?
I can't speak for other solutions, but the Ripple offering, yes.
Taking the word here from a regulatory affairs and compliance perspective, there are two issues to be named here. One is, first of all, any business that it's based on blockchain technology used to be able, until very recently, to establish itself anywhere with very little engagement with any government entity. That is changing very fast. The definition of what constitutes either a payment provider or a crypto player or service provider in that space is being looked at from very many different angles from a regulatory perspective. The other important aspect to mention is that, and I think this is more of an educational part, there is a belief in the market that money laundering and crypto go together. I would say, based on many years of experience in the payments and remittance and overall AML space, that the traceability of the blockchain changes the conversation immensely. But for some reason, people still believe that this is a totally unruly space. I think there's, like in anything, an exploitation of the different levels of knowledge, but overall, the visibility that you have from a transferring and usage perspective with the blockchain is unparalleled with what's possible on the fiat side. But we're very early on in the discussion, so a lot of education needs to take place to clarify what are the risks, how to mitigate them, and what is simply not true from a technology perspective.
That adoption piece, I think, is key, because transparency, ironically enough, to your point, there, from an AML standpoint, it's a lot more transparent to leverage transactions on a blockchain. There's a lot more visibility. You're able to traceability as well from these. It goes from one address to the next, which is key, and it can be done in real time. This is not something you have to go back 30 days to go see, and Ephraim, you know it better than I do on this, right in the history on what to go on. But it's making sure that regulators see that component and start to leverage it and be open to it, as opposed to saying, new technology bad. Yeah. There's the challenge.
Although I would say, from a regulatory perspective, that concentrating on the bad aspects of it, which can be, not even 3% of the total transfers and volume, is the wrong way of looking at it. We need to see it for what the technology can provide and regulate it and supervise it from that perspective. So let's look at the good side, which is probably 98 to 99%, and deal with the outliers the way they're supposed to be dealt with.
Even talking about numbers there, the number that I saw was even lower than that. Was 0.3%, which was identified as bad transactions, and the benefit is it's around $3 billion. They were able to find out where those funds were going and how they were going through. I'd like to challenge HSBC to do the same and to see if they could do that there. But going on with questions, Rocelo, I'd love to hear your thoughts about what do you think the benefits are of blockchain as you see it with SmartPay?
Well, just like you said, right? If I'm in Brazil and I cross the bridge to Cidade do Leste in Paraguay with a bag full of cash, no traceability at all. That's it. I crossed the bridge, gave the money to someone else, done. No one ever going to see that. And like I said, HSBC cannot trace the money that came from the Mexican cartel, right? When you talk about blockchain, everything's registered over there. Even let's say, for example, I'll give you a perfect example from a federal judge here from the United States on the case of the Pirate Bay thing and the deep web. He mentioned that those addresses, whoever received money or Bitcoin from those addresses, will be in part of the whole thing. So basically, if there is any problem, you just put that on a blacklist, on a watch list, and whoever received will tell the government, the authority, or, hey, I got money from that one. What should I do? So then tell the user who sent to explain where he got the money from. When it's a paper money, that is impossible because that's not marked. Well, some countries, they do have the serial number for the nodes, but the majority, they don't. So blockchain will help that a lot. And now we see what Europe is doing on the MiCA. That is also, if I'm a provider, a wallet provider, every single user will do a KYC on it, I'll register it. So the user is still the owner of the private key. He still won't own the money, and he's playing according to the rules for that particular country. So if we do a proper regulation with the user feel comfortable in sharing not the whole information, but part of the information, I do agree to say, okay, the government knows my wallet address, but I do not agree in the government knowing my balance address. That, I think, is a perfect solution. You need to know that I own that, not how much money do I have, because maybe you can send someone to my house and steal my money, right? And that information, normally countries like Brazil always leak that information and is on the dark web so everybody can get it. That is my thought on that one. On the blockchain side, now we are talking about 24/7 payment system, messaging through the internet from one side to another. So this is the future, this is the solution. And like I mentioned before, now sending money from Brazil straight to Argentina, it's so simple and then fast. And then also make available the possibility to other participants from the system. So let's say in Argentina, some exchange will say, well, give me the USDT, I will take it and I will pay here in pesos. So the amount of companies or fintechs that be connected there using a single, simple, smart contract, it's so easy and so fast. So I think the blockchain technology will just put it down Western Union, money bookers, and all those guys. And I think remittance and payment, global payment, is something that the banks have to think about it because there is no place for them.
That's an interesting topic, and I think that's a nice segue into thinking, who's going to win for the future? Who are going to be the true winners of this crypto adoption there? If we're talking about blockchain technology, is it going to be banks who are adopting this and becoming the leaders? Is it going to be blockchains themselves that are going to get into the crypto space? Which type of vertical integration is going to win? Aaron, I'm sure you've got some thoughts on that. I'd love to hear them.
Well, so the first, my mind first goes to hopefully the end user sort of person that's trying to send remittances who are paying super high fees. The hope is, at least from our perspective, we are providing a solution that has a much lower cost structure for our business customers, and that eventually that allows them to price more competitively and downstream offer lower prices to folks trying to send money cross-border. I think of the people, like I mentioned, the folks that are tasked with dealing with those Nostro and Vostro accounts, I think their lives are much happier in a world where they're not having to top up those balances and stress out about wire cutoff times and holidays and so forth. So the ability to actually move those funds around the world whenever they'd like with the instant settlement, I think, is quite powerful.
Fair. Jose, what do you think? You've worked in a lot of different industries, traditional, fintech, and crypto. Do you think that there's an ability for traditional to adopt and implement? Do you think that they would do it through a partnership, or do you think blockchains are the future? What's your vision?
I think it's a little bit all of the above, but I do think that a number of the well-established traditional financial services providers will have a very good opportunity to do good in the crypto space for a couple of reasons. First, they have the wherewithal to spend and develop solutions in an environment where there's a lot more acceptance from regulators around the world. The second one is they tend to look at things with a longer term view. And so they're more reasonable when it comes to managing the business once it has taken up. If you see what has happened to a lot of players in the crypto industry in the last couple of years is, you get people with very good technical abilities. They develop a concept, launch a product. It has some success, but then they go crazy. They don't know how to manage the growth. They don't know how to see 2 steps in front of them. There's a lot of mismanagement, a lot of lack of focus on what they're really strong at. And so people who have spent more time doing that work will have a better rate of success. So, I don't want to say, is it going to be JP Morgan as opposed to Fidelity, as opposed to, I don't know which one in particular, but I see the big players in the industry doing a lot of investing with good talent, taking a longer view of what success means, and at the same time counting on more support from a regulatory perspective.
And avoiding the pitfalls of a lot of startups there. This
Yeah.
is the story that I read to my daughter, the tortoise and the hare, right? To go through and slow and steady wins the race.
Yeah.
I'm with you on that one. Rocelo, what do you think?
Well, I think, like I said, if the banks, they do not change the way they think about it, blockchain and all this technology that is out there, there is no space for them. Those that understand and start maybe to get few fintechs or startups and understand what they are doing and try to incorporate, so they might have a chance. What I do think, one thing I have to agree, we need a very good, maybe regulation, but a very good one. Because if someone asks me, which one do you prefer, an exchange that is a pure exchange, such as FTX, or an exchange owned by JP Morgan? An exchange owned by JP Morgan all the way. It's because it's so regulated. They don't want to take my money and run away. But of course, we have some other exchanges, such as Bitfinex, that they have the license in El Salvador, then they have the license in Kazakhstan, and they are playing according to the regulation. So if I am a trader and I want to do trades in cryptocurrencies, I'm rather to do with a bank that is fully regulated. And I know the risks. It's not my money, but I know someone is looking. So a good regulation is always good. But to the market to grow, we need also startups. We don't need, like, say, 100 directors trying to make a decision in something. Big companies take time to decide what to do. A small company, it's easy. You just go and do it. If it's wrong, then you find out at the end of the day. So I think we need a mix. But at the end of the day, I know banks, that's what I think, banks might buy fintechs, we might buy startups, only to do that when that is good enough, then they will integrate inside their platform. And then the other thing that the banks need to understand, we do not have 9 to 6 anymore, guys. Now it's a 24/7. And or either you understand or you out.
It's an interesting point there, because having transitioned into crypto, one of the things that I've heard is, Erick, you're too formal because I'm wearing a freaking belt. Erick, you don't curse enough there. But the third one that I hear is the biggest bad word is FTX right now. And it's not because it makes the rest of the companies look bad. It's actually one of those that it's like, we told you something like this was going to happen. This highlights the issue of centralized versus decentralized. And I think that we've had a little bit of the topics on this piece and how it goes through. Centralized is a shift of the likes of a JP Morgan saying, all right, listen, we're dabbling in blockchain. We've got our own token. Stay with us, keeping it. But it has the same limitations. One, it's a company, and it's those same old guys in suits around a table who decide, and they go home at 6 o'clock. But two, it's contingent on the industry. And Jose, you and I were talking about earlier about the depegging of the USDC, for example, because it's centralized, it still requires having cash, for example, and that's one of the challenges. Aaron, I'd love to hear your thoughts on the benefits of decentralization. I'm going to go through where it really is as agnostic and trustless as possible. There, what are your thoughts on decentralized versus centralized?
So strongly support strongly support decentralization. I don't know that I've got too much to add, though, on that particular one. I mean, decentralized, all of our technology is based on the XRP ledger, which has been around for probably I'm not actually sure, 12 to 13 years, something like that, 10, 12 years. So we strongly believe, all of that blockchain distributed technology is actually what powers our solution and enables all those benefits that I described before in terms of the transparency and the 24/7 availability and so forth.
Spot on. Jose, I'd love to hear your thoughts on decentralized, because this is a little delicate because governments are not as involved, banks are not as involved, and they like to have their fingers in all the pies there. What do you see as the benefits and challenges of decentralized?
And that is an interesting circumstance, because it's got less to do with technology than just pure power plays. The incumbents obviously do not want their power to go away. And here we all have our personal opinions. I happen to think, for example, that central bank issued cryptocurrencies are not the way to go. But the issue is, can we come up with a system, not only the technology, but all the processes, governance, accountability, to answer the current needs and do away with the limitations of the traditional system? I think it's possible. I think that is where we need to go. The question is, how much push are we going to have to do? Because, again, the SECs of the world, the central bankers are not going to give up easily their moats. And so, it's going to be a challenge.
Well, for me, I would say for the user, it's a dream. For the regulators and government, a nightmare.
Yeah.
So we have both sides here, and I don't think they're just going to let it go. That's it.
Yeah.
It's very complicated. But decentralization also showed us a way that the world will evolved. So it's nice to see the decentralization working. Of course, we're not going to be 100% decentralized, especially when we talk about money. It's impossible. So like I said, it's a dream. If anyone say, wow, one day our money will be decentralized, okay, buddy, wake up. It's not going to happen. That's it. It's a way the government have the hands over there. I kind of agree, let's say, to have not 100%, but for a few things, let's try it out. Let's see how that goes. Or maybe have the government not participating that much. But I think the decentralization for some things will be really, really good. We might need 20 years to get to see that actually working on the money side.
Yeah. Erick, I think if I made that, probably the more relevant point for this audience is, we're all in the payment space. Let's say you want to get into crypto rails. Which particular form are you going to have to adopt in order to satisfy regulatory requirements? Or do you have to partner with a particular set of people that bring to the table something that you don't have? And that is, again, the more difficult question to answer at this point, because the possibilities are so varied. I mean, do you become a money service business if you're in the US? Or do you have to register as a broker-dealer? Do you become a payment institution to issue e-money? Is it securities versus commodities versus just payment processing that you're doing? In each jurisdiction where you go, the answer to this question is going to be different. And so your particular answer from a business perspective has to be tailored to the particular market that you go in. I mean, in Brazil, it's done in a particular way. In Argentina, it's done in a different way. In Colombia, it's yet different. Even in the cases where you're grandfather or adopted from a regulatory perspective, you still run the risk of somebody closing your channels because the thinking around crypto and the values change from day to day. So we
And corridor specific is
Yeah.
key. Now, we've talked about some of the challenges. I'd love to bring this to light. Aaron, you've got some actual use cases. I'd love to hear like a Ripple client and how they've been able to leverage your technology there in order to facilitate cross-border payments.
Sure. So I spoke about, actually one quick point though on that last question though about the centralized versus decentralized. The earliest days of crypto, it was all about revolutionary, like we're going to overturn the system, right? And it's going to be anarchy, whatever. We're going to complete removal of centralized players. So we've never embraced that. We've always thought, hey, we need to work with regulators, need to work with the financial institutions, and so there's a way to find synergy where those, centralized players are leveraging the decentralized technology for sort of a kumbaya situation. So that was just another thought that came up there. As far as real-world use cases, I've touched on the remittances example before. Again, high fees that are being paid by the end user that are largely driven by the cost structure that I've talked about, our solution and others being able to address, just the overhead around pre-funding and so forth. We've also seen growth, and it's pretty much the similar value proposition in treasury and bulk payments. So lots of our customers have entities around the world. They need to move funds for various purposes between those entities, need to make payroll at a foreign subsidiary, for example, and all of the same pain points for that CFO or that treasury operation, with wire cutoff times and so forth, exist in that use case as well. So we've seen adoption both across the remittances side, treasury side, and in the sort of bulk.
Payroll is key there, and one of the biggest questions that I've heard from a lot of partners is, how do you handle the last mile? Because it's all good and well, and the cost of foreign exchange is key. Once you get from that the crypto in country X, how do you get to local currency and change it back to fiat? How do you manage that part from a Ripple standpoint?
It depends on the market. In some cases, we're working with a local crypto exchange that's converting the XRP into local fiat and then leveraging the local payment rails, like the PIX system that Rocelo mentioned. In other cases, we've got payout partners that are receiving funds, and then they're managing that conversion. So it's kind of different solutions for different markets.
It's an interesting one because if I take a look at it now and working in crypto, it's a similar challenge we've had. Crypto isn't the absolute solution for every single company in every single corridor. There are some that stand out. Brazil, I think, is an excellent example, and part of it is because it has the real-time payments of PIX, for example. Mexico is another one that has SPAY. India is another one on this. Is that what you guys would suggest, is by country there are some certain metrics that need to be required to have in place before one would say blockchain is the answer and the solution for? Would you say that it's a phased approach, or would you say it's blanket, that blockchain is the future for B2B payments?
I can take it. Well, it depends on in some use cases, the instant payout and leveraging something like PIX is super important, getting the funds into the end customer's hands. Payroll, treasury movements, doesn't need to be down to the second necessarily, but it can be down, if it's within an hour, then it might be good enough. So again, it's all kind of use case dependent.
Well, Argentina, as you guys know, is the best economic market in the world right now, right? So, yeah.
81% inflation?
Oh,
Yep.
yeah, it's the best one, right? So now, the majority of the consumers that from Brazil go to Argentina, they go there to buy stuff, to buy a leather jacket, to buy the second best wine in the world, because the first one is coming from South Africa, all right? So, yeah. So, but it's, yeah, I know. Pinotage, you should try. But Brazilians go there a lot, and buying stuff over there, some Brazilians, they don't have a very good credit card. They cannot spend more than $1,000 in a credit card. So the best example now, we have Brazilians going to Calle Florida, buying anything, paying with PIX, straight. The merchant, the store, receive automatically, like 8 seconds later, in USDT, which is the largest coin in the world right now. I think it's like 60% of the market, and on stable coins, 80% of the market. Receive it straight. Now we are connecting straight with a local provider through API to pay the merchant in pesos. So the last mile, done. The intermediary, done. Everything through blockchain. But yeah, the Brazilian paid with reais in another country. This merchant has nothing to do with that. We convert from bank chain to blockchain. Now we are surfing on the blockchain with USDT. Locally, the merchant, they say, well, you know what, I don't want USDT. I am crazy, I prefer pesos. Because he has to be crazy to prefer pesos. So in that case, the last mile, it is one to say, send all the crazy guy here because we take the good coin, which is USDT, and we give them the shit coin, which is the peso. So now problem solved, everything through the API. And all this process, 10 seconds. So of course we did that, like I said, according to what Argentina needs. Maybe in France, one day someone go to Louis Vuitton and buy a fancy bag, and then we have to do according to the local one there. But if you can do those kind of things in Latin America, you can do anywhere in the world. Because the rest of the world is easy. So if you can bypass or you can play with the regulator in Brazil, you can do anything anywhere in the world because it becomes so easy to do. So I think according to the countries, we need to do something. Right now we are working also in Angola to see how we're going to help them. Because Angola has a huge problem when it comes to send money overseas or even to receive money. So we are trying to understand how it works, how we're going to use the last mile. But as you guys can see, we're always using one stable coin to give a little bit of assurance to the merchant to say, don't worry about it. The price will not going to be 10% less tomorrow. It's going to stay in US dollars, which is the most usable coin in the world. So I think cases like that, depending on the country, we can implement really fast. Some countries, yeah, we need to fight and then look for a solution inside the country. But it is possible.
Eric, not to shoot myself in the foot, but if you wanted to make the contrary case, you don't have to necessarily use blockchain or cryptocurrencies to do something like that. For example, e-money providers like Tigo Money have been paying out remittances in local markets in Latin America and Africa for over 10 years now. So the technology is there as well. It's just a matter of finding the use case for the specific customer sector that you're targeting.
Infrastructure, right? I think that one's a key point.
Yeah.
I've heard a little bit about stablecoins, just from a show of hands there. Does everybody know what a stablecoin is? If you raise your hand if you've heard of stablecoin, and keep your hand up if you've used stablecoins.
Yeah. Can I increase your question? You guys know the difference between Bitcoin, altcoins, and stablecoins?
We just got the 10-minute signal.
Yeah.
This will be good.
I'm going to be really, really quick.
Yeah, sure.
Okay, and of course, shitcoin. Altcoins, all the technology, all the coins that came after Bitcoin, such as Litecoin, Ethereum, and all those other coins that you guys see in the market. Stable coins are something that is paired with something stable. Don't have to be money. Can be gold, like there is USDT paired in gold, silver, soya, anything that is stable. And shitcoin, those ones that are printed in a piece of paper. Those are the shitcoins.
Have no utility, right? The meme coins, these where you buy it for novelty and it goes up by 3,000%, and then everybody else buys it, they become rich, and then they lose tons of money. That's the shitcoin or meme coin to go with, right?
Just the US dollar, the euros, the reais, the pesos, and all those.
Yeah, just one important distinction when talking about stable coins. There's basically two types. The ones that are maintaining the parity through algorithms, and the ones that are maintaining the parity through reserves. It makes a heck of a difference, okay?
Okay, I'll have a counter to that one on this one. So heck of a difference. I think that you're leaning towards the dollar-backed ones because it's how it. There's a flip side of that. We talked about centralized and decentralized before. If we really want to be completely lose our reliance on traditional banks, we take a look at the algorithmic ones. We've seen failures in that space, right? Luna being the biggest case.
Yeah.
It was algorithmic, and now algorithmic is one of the bad words in crypto. That said, if it's algorithmic based on Bitcoin, it never has to lose the peg, and it never has lost the peg.
Yeah.
The ones have, unlike the stablecoin, which is with USD, because it has a completely decentralized version.
Yeah.
The fact that we have varying opinions on here means that there's no clear answer in the future. That to me is the biggest outlier. I'm getting the piece, which is great because I've had to go to the bathroom for the last 5 minutes there. But if we can finish on, from a standpoint here, what's relevant for the teams in here as far as adoption, as far as, all right, I'm a traditional company or I'm a fintech looking to optimize my services. Not that they want to get into blockchain or crypto, but they want to improve efficiencies. They want to look for technological advancements. They want to improve their P&Ls. What would your suggestions be on increasing adoption in a phased approach? Aaron, you've got a lot of experience with this. We'll start with you.
Well, so the adoption, like looking forward, I guess, what I'd say in the earliest days, because we've been at this for quite a while, the company's been around a little over 10 years, we were bringing our customers on this crypto journey. And so earliest days, folks were quite conservative, hesitant to embrace the new technology, and kind of there was uncertainty on the regulatory front and so forth. In recent years, with regulatory developments, so in different jurisdictions, Brazil is a good one, Europe has been mentioned today, Japan, UAE, et cetera, of clear rules are being outlined, and so the uncertainty has been removed and the sort of foundation for innovation has been laid. With that, big players, Stripe, Amazon, Visa, MasterCard, everybody's come out with their crypto sort of strategies, and I think that will embolden, wave after wave of the next sort of round of institutions to embrace. So specifically, people can come and talk to us, come talk to me about how we can help you with adoption. But I think more broadly, there's a little bit more regulatory certainty to come. It's much better even now versus even just the past few years. And with that comes sort of big name institutional adoption that I think will be encouraging for others that might have been on the fence previously.
I think a couple of quick points. One is this is a journey, and so there's movement in terms of education, understanding the features, and so forth. And it's always important to remember that there are no absolutes here, in the sense that you're never talking about crypto by itself. There's always a fiat component, and so you need to keep that duality in place. That's one of the points that I will make in another topic is the fact that the current banking situation affects crypto greatly. I think people underestimate it. I'm one who thinks that the Achilles heel of the crypto uptake right now is the lack of sufficient banking support, and so that's something to keep in mind.
I'm going to give a really good one that is it's really quick. We need better interfaces. We need better applications. We need to understand a little bit better what exactly the user need, and you need to design something really, really good. That's why the users stay in the bank, because the bank application is so beautiful and it works so easy and so fast. So in order for you to want to use blockchain, make sure you understand what you're doing and make sure that your user will use in a very simple way. That's what I think what's missing.
That's fair. Just like we're scratching the surface right now about blockchain technology and how to leverage it, just in our panel right here, we're scratching the surface about how to leverage it. I would encourage everyone to speak to our smart panelists afterwards and to go through. Thank you guys for your time.
Thank you very much.